Welcome to the Supporters Fund, Ask an Investor. I'm your host, Jeffery Potvin. Let's please welcome William Mejia from Arrebol Capital as our investor today. Welcome, William. It's a real pleasure having you join us.
Thank you, JP. It's an honor to be part of this forum, and for us, it's great to have a platform to amplify our message and to be part of this community, which is obviously a very important part of the VC ecosystem.
I love it. Well shared. I might have to use that as our new introduction, but I enjoy that. It's great, and I agree. This is it's a growing world, and being part of this startup community it's not just in your own country. It's literally global today, and I think it's exciting to be part of all of these different global communities and being able to share what we do and how we all do it. So it's pretty exciting to have you here today. So the way we love to kick off the show is that we want to dive in and learn a little bit more about yourself and how you got started and where this all came about. We're going to go all the way back to your Goldman Sachs days and even probably when you were working for General Motors. And what I love about your background is that you've worked for some heavy hitters. And being in the finance side, I think it's really exciting to dive into this because I do find, and I'll probably say this on every podcast, that I get to interview someone that is in the financial space. They tend to really understand startups. I find that when you're in the banking sector, you get faced with a lot of businesses, and having that background really does help you distinguish between the successful or the ones that are family style businesses versus scaling businesses. So I'm excited to dive into that. And then one thing about you that nobody would know. So I'll turn it over to you, William, and please share away.
Excellent. Well, thank you very much. Yeah, no, definitely. I've been fortunate to have had the opportunity to, move quite a bit around the world and to have obviously worked for some great companies. So, look, I am from Colombia. So I grew up in Bogota. I went to university in Bogota. And you mentioned I worked for Goldman Sachs and for General Motors. General Motors was my first job out of university. Where I worked closely with the CFO, and it was my first approach basically to the financial world. But soon enough, I moved to the US. So as many Colombians do, and many other people around the world, they go to the US in search of better opportunities and looking to have the opportunity to also study in some of these great universities that are in the US. And I had that chance. I moved to Boston. I did my master's in finance, and right after that, I engaged Goldman in New York, where they gave me a fantastic opportunity to cover Latin American banks as an equity analyst. And so I cover banks in Brazil, Mexico, Argentina, Chile at that time, and I did that for a few years, which I enjoy thoroughly. But then I fell in love with a French lady, and we got married, and we moved to London. I guess for her it was easier to be closer to home, and so I moved to London, where I also had a huge opportunity to launch coverage of many emerging markets out of London, particularly Turkey, Russia, South Africa, always covering the financial sector. Always covering financials. And so, my perspective was complemented by not only covering different companies, but obviously companies in different countries. And then as I continued basically that journey, Goldman offered me the opportunity to move to Dubai to open the equity research division there. And so I had the opportunity to, again, extend a little bit more my regional coverage to look at Northern Africa, to look at the Gulf. We had also the opportunity to participate in a couple of IPOs. And so it was a great experience. But towards the end of my tenure there, I guess as it happens with many sales analysts, I started to play with the idea of moving to the buy side. And I saw this, or I was lucky enough to get in contact with this large asset manager here in Switzerland, where I lived 10 years ago, which is GAM Investments. And they ran a global emerging market platform out of Lugano here in Switzerland. And it was a great sort of a transition for me into the buy side because it was covering emerging markets, which obviously is something that I love. Investing a big portion of the portfolio in financial companies. And so I moved here to Switzerland. I started covering global emerging markets, and it gave me the opportunity for the first time to start looking at Southeast Asia. I think that was my first approach to private markets, not because I was investing in private markets, but because out of all the emerging markets that I had covered in my life, this was the first one where the private market was so active and so strong that it basically was quite difficult to miss it, right? So even though I was investing in listed equities, every now and then I would run into a company that was doing something exciting in fintech or logistic or whatever. And so I was completely new to me. Even working at Goldman, I had never really encountered this world before. And so I was asking myself, why? This is incredible. Look at all this action happening in Indonesia, Thailand, why is this not happening in Latin America? And so, and this was about 10 years ago. And then soon enough, I started looking at a few companies, particularly coming out of Brazil, that were starting to list in New York. And I participated in a couple of IPOs of fintechs like, PagSeguro and Stone, great transactions. And it really opened my mind to a completely different environment. And so I started to, again, going back home and getting closer basically to Colombia. And right now, obviously, the venture ecosystem is mainly centered in Latin America around this axis formed by Mexico, Colombia, and Brazil, right? And so that's how I got here a little bit, the journey that I followed. One thing about me that not many people know, perhaps, is that when I was in Colombia, very little, I lived a few years in the jungle. My father was an officer in Colombian Air Force, and he was posted in a base in the middle of the jungle, and I was lucky enough to, or unlucky enough to, actually get malaria. So I have really experienced emerging markets in every single possible way.
Oh, that's awesome. And well, I'm going to say your story is awesome, but I'm sure getting malaria was not one of the highlights, but it does sound pretty interesting. Just out of curiosity, when you had it, what was the outcome of it? What is malaria cause? Was it
you feel very weak, you are you have fever, of course. I think I was like 10 years old, so I was little, right? And so it was not a great experience. I guess the best part of it was that I get to stay home, so I missed school like for a few weeks while I recovered. And so yeah, but other than that, it's not a pleasant experience. But I think this is the first time that I'm sharing this. It's actually something very personal. I don't think you asked me something that probably people don't know about me. That's one of those things.
No, that's a great share, and it's an experience, right? And I guess like every 10-year-old kid would be pretty excited to get to stay home regardless of the outcome. I'm sure battle through anything just so you don't have to go to school. So it's awesome. I want to kind of go back to a couple of things that you said, and one of them is, and obviously in the financial world, your experience going in different markets is awesome. It's very rare that you get to talk with someone that's been able to be an analyst in so many different markets and learning what's going on in those markets and seeing where these companies are going IPO and then being able to jump into them across the globe. So when you talk about emerging markets, maybe you can share a little bit more about what that definition means to a banker on what emerging markets are, because I'm sure there's a little bit of a difference from a startup to an IPO when you're looking at what an emerging market is. Can you kind of share what that is, and maybe even share a little bit more about where you see these emerging markets today?
Excellent. No, absolutely. So yeah, emerging markets. There is obviously the technical definition, and it is a market that by certain financial standards and macroeconomic metrics is in the process of achieving that kind of development that you see in in the West, right, and in the developed markets per se, right, obviously. So that's like the boring definition, right? But I think an emerging market is that place, right, where you can see the very early days in some cases, not so early in others, but in the way of actually becoming a more sophisticated and obviously I guess resilient society and economy, right? We take for granted in the West the kind of benefits that we have because we have achieved those kind of landmarks, right? But in emerging markets, obviously everything is being built, everything is in the process of getting to those kind of standards, and that's what it is, right? Obviously, where do you find emerging markets? Emerging markets are obviously centered in three kind of pockets, right? You have Latin America. Most of Latin America is there. Even Chile, that is a little bit more advanced, still is an emerging market, right? Then you have obviously Southeast Asia, where Southeast Asia is the quintessential emerging market, right? Even China is still, obviously an emerging market, right? And then there is EMEA that incorporates that part in Europe that obviously is still emerging, particularly the East and encompasses obviously all Africa and the Middle East, right? So it's almost all the world, apart from obviously North America, Europe, and Japan, and Australia. I guess every single other market is an emerging market. So it's quite exciting, that we have quite a lot of choice, right, to look at when investing in emerging markets. That there are many places that are very different. The dynamics are very different, but the common denominator, of course, it is that every single one of these markets is striving to actually improve their standards, and obviously looking at the West as the template.
So it's almost becoming that when you have an emerging market now today, it's kind of like decentralizing the way we look at the globe. So I think maybe 20 years ago, everything was very self-grown. So you had to be in the market in order to learn that this market was now going to be emerging. They're putting a lot of money in, they're putting a lot of time in to build up startups, build up companies, build up an ecosystem. So those were efforts that were being made into these different regions. So you start to see this happening, as you said, a lot more in Central America, and other areas where they're starting to put the effort into it. So you can kind of start to vision those that in the next 5 years are going to start to get a lot of talent and a lot of skills. So, Google just put in some 700 million into Kenya. So now they're going to start looking at that in the next few years as an emerging market, because you're going to have financial whereabouts that are going to help drive the economy. They're going to start driving more people making money to start creating their own companies. So now you're going to start making that next tier of a company that's coming out. So when you start to decentralize this entire environment, which is globally putting everybody up to the same speed, TikTok is decentralizing music. Now everybody can be a music artist because they've got platforms that allow them to do that. So is that the same kind of thing that's happening in these markets where you're starting to see startups and companies being built in all of these different sectors that you never imagined would have happened this quickly and all together at the same time? So it's almost too much at the same time. And has this become a problem that financially it becomes unstable because you have so many emerging markets, as you mentioned earlier, that you can't keep up with the amount of companies and the amount of businesses that are thriving because of the environment they're in?
Yeah, no, of course. I mean, I think what is important, very important to recognize is that investors around the world are always in the search for growth, right? And growth obviously is happening in emerging markets. That's where the growth is going to come from, and has been the case for quite a while, right? And what is interesting now, particularly with what we have seen in the last few decades, right, with technology, is that technology has made access to that growth more democratic, right? So, it was in previous decades, access to capital was the primary driver of this growth. Now, obviously, that is complemented with talent, because many people from emerging markets are obviously having access to the same kind of education and the same kind of professional development that you've seen, in developed markets. But then everything is being amplified with technology. Now, obviously, companies in Colombia can create apps, that can compete in certain industries with companies in the US, right? I mean, that has never been done before, right? And so what I think is becoming, increasingly interesting in emerging markets from that perspective, right, is that we have the ability now to create companies that can compete at a global basically base, without having to spend decades, right, and huge amounts of capital, to get there, right, and that is revolutionary, right? So that was one of the reasons why I found quite interesting to move to private markets, right? Because if you will, listed markets, even in emerging markets, become a little bit boring. They are identical to what you see basically, and then there are a lot of limitations, right? And the dynamics are different, right? So moving to private markets, you see this new environment, which is quite revitalizing, right? You see all these entrepreneurs that are doing amazing things, and that is so gratifying, right? And so it is something unique that is happening in emerging markets, and I think is new since like 10, 15 years ago. It's a new development.
So with these emerging markets and taking the background that you have and the things you did with Goldman Sachs and being able to move around and go into these different sectors, different countries, and start to piece together what's going on in this environment, do you find that you're able to kind of see where that next upcoming emerging market is because of your experiences, or do you go back to that you can grab all this information online now? It's pretty easy to figure out.
No, look, I mean, it's very interesting that you asked that, because again, as I mentioned before, what really opened my eyes, at least to this world of private markets, was my experience investing in Southeast Asia, right? And again, I think Southeast Asia is like probably 10 years ahead of Latin America in terms of development of venture capital, right? And so by looking at Southeast Asia, you pretty much have a crystal ball into that you can use to actually see what could work, what may not work, or how things are going to evolve, right, in Latin America. And so that's fantastic. So we have that experience, and I think I'm completely sure that in a few years, Africa perhaps is going to move into that situation, right? Hopefully it's gonna be there, right? There are different aspects, and Africa is a little bit more complex in the sense, that Latin America, the culture of all these Latin American countries is so homogeneous, right? That makes it a block that is quite easy to use to leverage all these applications to launch, startups that can reach a scale quite fast, right? Maybe Africa, given those differences, is going to take a little bit longer, to get there, right? But maybe it's the next frontier, right? And so, yeah, I think through the development of emerging markets, and is you can talk about this, for hours, right? Because it goes in cycles, right? And the development of these emerging markets is not really linear. At the beginning of the 80s, I think the real emerging markets were actually in Latin America, but these Latin American countries went through a massive debt, issue, right? And so they took, decades to recover. And in the meantime, Southeast Asia took a lot of speed, right? And they developed quite fast, right? And they replaced pretty much in the map of emerging markets Latin America throughout the last few decades, right? Now it's sort of like, Latin America is coming back, and is trying to find again a place within that economic sphere. Let's put it that way. But if you ask me, yes, I mean, of course, I think especially in private markets, Latin America is where the action is, because I think obviously there is less competition. There is more opportunities to invest in an ecosystem that really is growing very, very fast. So the universe, has grown exponentially in the last 10 years. And so now we are at that tipping point where things are really getting exciting, right? So I think, look, again, yeah, Southeast Asia, a little bit more developed, Latin America catching up. And I guess, the last frontier would be Africa.
Awesome. So taking that concept of emerging market and what you're seeing in Latin America, do you feel, and is there a driver that with media getting behind this as creating this emerging market, do you think that what comes out of the end result of this is that in order for these emerging markets to really take off, that they require a lot of outside investment? So you've got a lot of people that are also seeing this and they're saying, wait, I got to get capital into this country. Let's take Chile or Mexico, any of these business countries right now. And they're saying, look, we've got lots going on here. It's affordable. People love living here. And now they're getting flooded with a lot of people from COVID and everybody else driving in to want to live there. So you're bringing in dollars. But now there's also this whole environmental investment environment that wants to jump into this because they are getting the education's getting up there. Infrastructure is starting to change. Governments are putting money in there. So do you think that is what really is going to set this apart from an emerging market, is that other emerging managers are going to start dumping money in because they see this and that's the only way this will really kick into high gear?
Yeah, look, I think there are several aspects there. I think it is often the case that, unfortunately, local investors look outside, for diversification, because they think about diversification mostly in a geographic, sort of way. And so, unfortunately, in these early stages, we often see that most of the players, right, in these private markets are external funds, right? And it takes some time for this industry to develop because, of course, for these funds that are based in the US, in Europe, and in other parts of the world, right, Latin America, it only adds a little bit of spice to their portfolio, but it's never really the core of their portfolio, right? And so the role that naturally domestic investors should play, right, is replaced by these external funds, right, that again, are not looking primarily at Latin America as their with the objective to build a core strategy, right? But I think, also it is true that private markets and VC in particular are asset classes that are relatively new, right? Particularly VC. And so this is something that is taking some time to be understood, to be digested. And I think, with time, even domestic investors will realize, right, that, VC, even when deployed domestically, could play a very important role from the point of view of diversification, right? Not only because, the correlation with other asset classes is so low, but because, what really plays a very important part in unlocking value in the industry is the application of technology, right? And technology, of course, is just creating new markets, and that obviously is the ultimate diversification play. And so, yeah, I mean, look, I think the important thing that every single investor is realizing, domestically or otherwise, is that we are living through a changing paradigm. Every single industry is being digitized, right? Digitalization really is the driving force behind all this new economy. And especially in emerging markets, right? What you see in very different verticals is that, these companies are going from the donkey to the rocket. Basically, skipping every single step in the middle, because technology is enabling them to do that, right? And so the growth that you can generate through that transition is monumental, right? And so the opportunity to actually participate now in that transformation, economic transformation, is enormous. And so, so we have had so many discussions with many family offices and many high net worth individuals in Latin America that perhaps were not very aware of this, and now they're starting to think that is even, obviously a little bit shameful not to have exposure to that, right? And so that's great, and I think it's happening, and I think we are at a point in Latin America where wealth standards are really improving to a point that it could enable the deployment of many very successful applications, and which are at the end even as a vicious circle reinforcing that same trend, right? And so it's something that is going to take some time. But I think initially, just to answer your question in a few words, is mostly about external capital, supporting this development. Hopefully, motivating more domestic involvement from the family offices, communities in Latin America.
No, that's a great answer. And does that also mean that with the foreign dollar coming in and supporting and making investments, even if it isn't their bread and butter coming into Latin America, is that also opening up the domestic dollars, the family offices, to start taking more risk because they're seeing that others are coming in and risking in their environment? So it's opening them up quicker to make more, I wouldn't say leaps of faith, but just looking at this environment and saying, okay, we never would have invested in startups, or we never would have gone into this asset class. Maybe we should, because this group just came in and invested 10 million in this company in Colombia. So do you think that that's driving a change in the environment as well?
No, definitely. I mean, of course, when you see the likes of Sequoia, participating in some of these larger rounds, typically in later stages, not really at the pre-seed or seed level, but later stages. But when you see those big names participating, obviously that creates a lot of attention, right? And that definitely drives interest, and then at the very minimum, it makes wealthy, institutions and investors in Latin America question why, they should not be more involved, in this kind of asset class, right? So that's definitely true, and we have seen in several occasions, wealthy individuals asking us, look, what do you think about this transaction? What do you think about that? So that generates a lot of buzz. But I think also what is interesting is that all the other fonts. I'm very sorry. Something happened here. There is some music coming in the background. I'm gonna try to switch this off. The beauty of Zoom. So, but I'm sorry about that. But yeah, look, I mean, I think the other interesting thing also, it also happens the other way around, right? Because, we've seen a few very successful VC managers in Latin America. Unfortunately, there are just a few examples that have unlocked massive amount of value in a few transactions, like, recently on Nubank, right? Where, the company was IPO'd for more than $40 billion in New York. So this is obviously creates a huge amount of interest in the industry. And so it's also attracting more and more external managers to actually also reconsider whether or not their involvement is enough, if they need to increase their presence in the region, right? And then you have obviously the likes of SoftBank that, for better or worse, also have participated quite in a quite important way in the VC market in Latin America, and that also is well known and perceived, around the world, right? So this is happening, and of course, yeah. I mean, the more we have like mainstream players coming and participating here and unlocking value in the region and showing to the world, what the potential is really to transform and to generate value, then the better, right? And that's for sure.
Agreed. No, I love that. Now, taking back, and we talk about this quite often, and taking back to your past again as running through Goldman and all of these different groups all the way up to where you are today, you talk a lot about asset classes. So maybe you can define a little bit about what this diversification of asset classes really means to you, because I think a lot of investors or a lot of startups, they're always told to focus, do one thing, be the best at it. And then everybody else in the financial world saying, hey, you need to diversify because if something goes wrong, you need to be able to have assets here and assets there. So what does this really mean to a founder or to anybody that is working in these emerging markets? What am I looking for? What do I need to be cautious of? Or what do I need to be really driven towards and start moving towards? And obviously comes back to asset base. And I think today in the last 3 years, asset-based anything has become crazed. Like everybody, and NFT is an asset. So maybe you can define what these asset bases are, and then what people should be looking out for when they are diversifying, and if they should be doing this as a startup or not.
Yeah, look, I mean, I think from the investor perspective, the classic asset classes, right? I mean, the kind of obvious ones, right? So you have fixed income and equities and commodities and maybe a little bit of FX, right? But that's pretty much it. And as we have seen recently, they all are correlated to a certain extent. And so, there is not really one asset class that you say, okay, look, this asset class really is providing me with a hedge, right? That nothing is completely uncorrelated, right? But that at least would not be as affected as the classic, asset classes. And VC is one of them, right? And so I think, and it's one of the only ones that I know. I guess private markets in general, but VC in particular is a great diversification strategy, right? So that is and that's something that is not well understood and that is not well known, and that I think people don't really appreciate enough the role that technology plays in this dynamic, right? Because technology really is the one that is making sure that the founders and the companies that are tackling these opportunities can grow at different rates, right? Disconnected pretty much with what is happening in the broader economy. Why? Because they are creating new markets. They are innovating. They are in many ways providing solutions that are optimized to problems that we have in the broader economy, right? And so that is something that is not very well recognized, right? From the founder perspective, of course, I mean, you also need to understand that you play, a small part within a larger ecosystem, right? And that even though it is true that you are a little bit disconnected from the broader dynamics, there are certain aspects that are critical, right? And I think one of them is really access to funding, as we are seeing right now, right? And when financial conditions tighten, then it affects everyone. And it is true, that obviously there is a bigger implication, for the startup ecosystem, right? So it is not that it's completely disconnected, from the economy, or that is operating in a vacuum. Of course not, right? But having that in mind, the advice that we always give founders is, you have to be very careful, about, what is your runway, right? When the cycle is right, then you obviously have to take the opportunity to extend that runway and to have enough money, right? So you can run the cycles, right? And so, yeah, I mean, look, I mean, those are the two perspectives that I would bring, from the investor point of view. Really, venture capital provides an unparalleled, opportunity to diversify. You cannot put, a significant part of your portfolio there, but even if you put only 5-10% of your portfolio, then you are adding great diversification, and that's something that is not well appreciated. And from the founder point of view, really be mindful, that obviously you are part of a larger economy and that funding is critical.
No, and I love that, because you are explaining, no matter what, however you skin the cat, diversification is something that's needed. And looking at these alternative asset classes that are going into emerging markets and doing things that you could not imagine yourself getting into can be beneficial, especially if you're getting into the right fund or the right area. And this brings up Arrebol Capital and what you guys are doing. Can you share a little bit more about you're raising 30 million? You're going after Latin America. Is that all Latin American countries? Do you have a specific group? And what is the expertise that you guys are going to bring to this new market that you guys are driving out?
Absolutely. Now, look, I mean, we saw this opportunity, like I said, because we really think that Latin America is learning a lot from what has happened in other emerging markets in VC in particular. Southeast Asia is really the crystal ball here. And there are really three countries that are driving the development of VC in Latin America. Those are Brazil, Colombia, and Mexico. If you aggregate those three countries, they provide probably about 80% of the deal flow that you see. There are other, right, very interesting startups that come also from Argentina, from Chile, from Peru, but really, most of the action is centered around Mexico, Colombia, and Brazil. And also, if you look at all the ecosystem, the universe is probably 50% fintech. So there is a lot of action, in that space. And that has a reason, and it is just because banks in Latin America have not really done properly their job, and service is poor, and half of the people that do not really have access to financial services, right? So the opportunity there to play a role is huge, right? And so about 50% is fintech. Then you have everything that has to do basically with e-commerce and logistics, and so all these applications that are trying to optimize the supply chain probably take about another quarter of the market. So you see a lot of startups, in last mile, in warehousing, in fulfillment, all these kind of different applications in the supply chain. And then you have, basically verticals that are in the main playing trying to tackle the main problems in Latin America. So healthcare. So you have e-health, education, e-education. The real estate market, which is terrible, right? So PropTech has a lot of potential, right? And those are the verticals that we target. We tend to, and this was more by luck than by design. We tend to focus a lot on fintech and logistics, which happen to be the two largest verticals, just because I have a lot of experience in fintech, and my brother, who is my partner in the fund, is an expert in IT, and we can talk a little about later about his experience, right? But what we're trying to do is look, operate where there is very little competition, which is at the seed stage. Like I said, there is a lot of larger funds, international funds operating in later stages, but not many really venture into the seed stage. And so, and seed stage in Latin America is not really homogeneous, right? I mean, you have on one extreme those companies that barely have an MVP, right? That are trying to actually prove or test their business model on one extreme. On the other extreme, you have companies that are scaling, that have revenues that go from $100K to $1 million, right? And that are primed to start thinking about launching a Series A in like 12 to 18 months, right? After they close their series, the seed series. And that is where we operate, right? And so what we think is, look, there is a huge opportunity to back these entrepreneurs, to help them, right, in the development of their projects at this stage, by either taking them by the hand in the design of all their digital architecture, which is something that all of them are embarked in that process, right? And we have that kind of expertise. My brother has that background, right? He is an entrepreneur himself. He spent 30 years working in different organizations in the U.S., helping other companies with optimization issues in their supply chain, right? He worked for NASA, doing some deep research and participating in a few of the missions that took rovers to Mars, right? So he really understands technology, and he really understands entrepreneurship. And so we think, look, we can offer all that expertise at that stage when it's really, when it's really needed, right? And on my end, obviously, I come from a traditional asset management, investment banking background, right? And I can provide all that financial support, that many of these entrepreneurs need, and especially, when they need to connect with external capital markets, which obviously they don't have that kind of expertise and connection, and so we can facilitate that in many cases. We're happy to. So the idea with Arrebol is tap into that opportunity. There are thousands of startups at the seed stage that need this kind of expertise. Not only money, right? They need that kind of help, right? And we're happy to do that. We're happy to basically help and get involved as much as the entrepreneurs allow us to, right? We don't want to really be an imposition, right? And we invest in mainly on those 3 countries, and in rounds that are the typical seed rounds in Latin America, which are between $500K to $1 million. There's been a little bit of inflation that has been deflated in the last 6 months. So we're coming back to the natural rounds, which are really around $1 million. These companies do not really need more than that to scale their project to successfully launch a series A. So yeah, that's what we do.
I love it. And I did see that your brother has a very vast background, not only from NASA, Sequoia, CTO. He does a lot of amazing things. So I think you guys have really put together a strong team. So very exciting on that side. We're going to kind of transition now into, maybe we'll do a quick case study. If you could share what it takes to be an entrepreneur, maybe share a story of working with an entrepreneur and what it went through. It could even be your brother, but what they just went through and how they really show and exemplify what it takes. And, entrepreneurship's not easy. So I'm sure you've got a great case study of a company that just went from almost failing to crushing it. But anything you can share, we'd love to hear.
Yeah, no, we have examples for sure, and we have a lot of scares as well that we can show. But and all those learnings are precious. But I think just in general, I think what really makes a great entrepreneur are a few common factors, right? That we tend to find in these amazing people. And I said, one of those is that they tend to have a unique insight, right? And so you have this person, most of the ideas are that way. This person that went to Latin America and tried to, from the US, right, and tried to basically rent an apartment, and renting an apartment in Latin America is a nightmare, right? You have to have someone that signs collateral for you. You have to, fulfill all these requirements that are completely insane. And if you're not wealthy enough, or if you are not a part of a certain circle, or if you're a foreigner, right, it is just really hard to actually do this kind of thing. So then obviously this person came there and say, look, this is a huge problem, right? He started thinking about it, thinking about the solution, thinking about the problem, right? And so he acquired a unique insight into this issue, right? And most of the entrepreneurs that we find that are very, very successful is because they have seen, due to their particular circumstances, due to their particular experiences, they have seen something that is quite important. They have really spent a lot of time thinking about it, and so they have acquired this unique insight, right? That's one thing. The other thing is that they're really, and this might sound like a cliche, but it is really true. They're really team builders, right? So, I have not seen yet. I mean, maybe there are some examples out there, but I have not really seen yet an entrepreneur that has been successful that hasn't been really good at building a team, right? And that is assembling, a team that works well, and very importantly, that you do it with very scarce resources, right? So it's not only building a team, but you have to do it really with very, very few resources, right? So team builders are definitely something that we look for. We really spend a lot of time trying to determine whether this person really is a good team builder or not, right? Another thing I think is data focus, right? I mean, the entrepreneurs that we've seen that are very successful are very data focused, right? They are constantly looking at the organization inside and outside, trying to build tools, that allow them to actually make better decisions, right? We spend a lot of time through our, interaction with these companies, trying to make sure that they build systems that allow them really to evaluate the development of their projects, right? So all those that are really data focused or being data focused is a key component, right? A key feature that makes someone successful, we think, right? And I think finally, I would say one thing that is a given, and I don't know how to translate this in English, maybe is an entrepreneur that has grit, right? You have to have someone that really, in Spanish, there is a word that is called berraquera. You have to have berraquera. You have to have, this motivation, this drive that really makes you bulletproof through adversity, because you're going to have the world, going against you, and you're going to be basically most likely be against the ropes many times, right? So you have to be able to bounce back and by sheer, motivation and force, you get out of this and continue, right? And so we try to really find out if this person have this kind of characteristics, and when you find this person, it's quite obvious that they have it, right? Even you have it or you don't, right? I mean, you can see it. It's quite visible, right? So yeah, those I think are four common characteristics. It's like the common denominator. You see that in every single one of these entrepreneurs that are successful.
Those are great. I love it. It's barraquera. Is that what you said?
Berraquera.
Berraquera.
Exactly.
Yeah, you know what? It's I call it the fifth gear, like the Michael Jordan fifth gear. So in this case, it's grit. It's all of that, and I love it. Focus, team builders, and unique insights. Those are four great common factors for startups and for entrepreneurs to look forward to and be if they want to have this successful business going forward. I love it. We're going to transition now into our rapid fire questions.
Excellent.
All right. So this is how it works. You pick one or the other. So the question is you coming from an investor standpoint, and then you choose which one fits best for you.
Okay.
All right. So here we go. Founder or co-founder?
Founder.
Unicorn or a 4-year 10x exit?
Unicorn.
Tech or CPG?
Tech.
NFTs or Web 3.0?
Web 3.0.
AI or blockchain?
AI.
First time founder or second, third time founder?
Second, third time founder.
First money in or Series A?
First money in.
Angel or VC?
VC.
Board seat or observer?
Observer.
Safe or convertible note?
Safe.
Lead or follow?
For the time being, follow.
Okay. Equity or interest payments?
Equity.
Favorite part of investing?
Meeting incredible people.
Number of companies invested per year?
Around 15.
Okay. Preferred terms? Any preferred terms?
Not really, but we always tend to ask for most favorable nations.
Okay. And then just to reiterate, 2 qualities a startup needs in order to stand out to you.
They need to have scalability, and they need to be near the inflection point.
Perfect. Okay, we're going to do some personal questions.
Okay.
Book or movie?
Movie.
Superman or Batman?
Superman.
Restaurant or picnic?
Restaurant.
5 minutes with Bezos or Oprah?
5 minutes with Bezos.
Mountain or beach?
Mountain.
Bike or run?
Bike.
Big Mac or Chicken McNuggets?
Big Mac.
Trophy or money?
That's a hard one. Money.
Coming from a finance guy, I'm guessing that the trophy one would be good for maybe a soccer game or something.
This is personal, right? You ask me professional, that would be different.
Yeah, that's true. Beer or wine?
Wine.
Camera or mobile phone?
Mobile phone.
King or rich?
King.
Concert or amusement park?
Amusement park.
Fortune cookie, birthday cake?
No, birthday cake.
TED Talk or book reading?
No, book reading.
TikTok or Instagram?
Instagram. I'm the older generation.
Facebook or LinkedIn?
LinkedIn.
Most famous person that pops in your mind?
Margaret Thatcher.
Oh, nice. It's a different answer.
One of my heroes. One of my heroes.
Okay, I like that. Favorite movie and what character would you play in the movie?
Favorite movie. Yeah, you look at one of my favorite movies is Forrest Gump, and I would play Forrest Gump. A great movie.
Perfect. Favorite book?
It has to be a Colombian one. 100 años de soledad. 100 Years of Solitude from Marquez.
100 Years of Solitude?
Yep.
I'm gonna have to check that out.
From Gabriel Garcia Marquez. It's our own Nobel laureate.
All right, I like it. There was when I was in Colombia, there was a famous artist who built the I guess those round shapes, the big, large round shapes.
Okay.
Oh, what are they called? They were like people they were like big, like a soccer ball on top of a big, massive sphere, and they were placed all over the city. I'm not sure if you
was this in Medellin or in Bogota?
Yes, in Medellin.
Yeah, no, look, it's a very active art scene, and I'm afraid, I have missed quite a few of these latest ones, right? So I don't know this one. I don't know this one, but it's interesting that you picked that up.
Oh, I love the art scene. So everywhere I go, I take street art photos. Big, massive fan of that, and I do go to a lot of the art exhibits. Excellent. So yeah, big fan.
Medellin is a great place for that.
No, it was. Medellin was awesome. Okay. First brand that pops into your mind.
Coke.
Which one?
Coca-Cola.
Coke. Okay. Favorite sports team?
This has to be a local one, so no people will know it. América de Cali. Soccer team in Colombia.
Football. Yep.
That's from my teenager years. I disconnected after that, so I have not become a Real Madrid fan yet.
Okay. I do know the name of the team. I'm pretty sure I haven't seen them, but I do watch when I travel. I do watch local football matches too. So another.
América de Cali is one of the main teams in Colombia, and they were very successful at the time that I was going through, high school and university. So yeah, that it is closer to my heart because of that.
That's cool. Awesome. We're almost there. What is the meaning of success to you?
To feel accomplished. To feel that you have accomplished whatever you set out to do. So whatever that is, it doesn't have to be monetarily speaking, or in terms of, it can be whatever you want to do. If you want to, if you can only feel accomplished because you wrote a book or you played an instrument or whatever that is, right? That's when you set out a goal and you accomplish that is the best feeling in the world.
I love it. Okay, last question. What is your superpower?
My superpower, endurance. I can do something for a very long time until I get it right. So that I think is an important characteristic to have.
That sounds like it ties in well with Berkara, your
Berraquera, exactly. And it's something that definitely you have to have if you really want to be the operator, because you're gonna have to be patient and persistent. Otherwise, you're probably not gonna achieve what you set out to do.
No, I completely agree with that. That's amazing. Well, William, I want to thank you very much for joining us today. We learned a lot. I took lots of notes. And I think the audience got a lot out today, and certainly Arrebol Capital is going to be doing some great things in the future, and we're excited to see how that unfolds. But thank you again for joining us today and for sharing. And on that note, we like to give you the last word. So anything that you want to share to the founders, to investors, I turn it over to you. But again, thank you very much for all your time today.
Thank you, JP. No, it's a privilege to be part of this conversation. I really enjoyed it. Fantastic forum. And I think, look, to all investors and founders out there, I think this time is a great time. I don't despair because financial conditions have tightened and we have economic times that are a little bit more challenging. I think, this is a great time to actually be making investments in VC, of course, to really sort of move aside this value conversation that was so annoying in the last few years, and you can focus really on value creations instead, and transformation and growth. And so I think it's a great time to be in this industry, and we encourage anyone that wants to share ideas to contact us and to even if it's only to discuss the industry.
William, how can they get a hold of you? That's a great last point. How can someone get a hold of you? Where should they find you?
Excellent. Arrebolcap.com, probably the best place to find out about us, how to contact us, how to learn a little bit more about what we do. Or you can write to me, william@arrebol.bc.
I love it. William, you're a good man. Thank you very much for sharing today. We will have you again on soon, I'm sure. But thank you again for your time, and having a wicked, awesome week.
Excellent, JP. Same to you. I appreciate it a lot, the window that you gave us to share our thoughts and our experience. Thank you very much.
You bet. That was great discussion with William. And I love that, just to kind of go back to the things that he talked about from what makes a great entrepreneur. You've got unique insights, team builders, focus, grit, Berraquera, hopefully I said that correct this time, scalability, and the near inflection point. I think those are all valuable points. And I do like the last dialogue that he shared about creating value creation instead of it fighting back against the value of a company. Now today, hopefully the way the markets have reset, we can certainly focus on building new companies and building out great new tech and supporting it and creating value for the markets. Great background, amazing how he's been able to certainly move his way around all the different markets and build into these emerging markets. And I think there's going to be a lot of success, as he mentioned, in the Colombian, Mexico, and Brazilian markets. So they're the next emerging markets for sure. Again, thank you very much for joining us today. If you enjoyed this conversation, please feel free to share it with your friends or subscribe to our YouTube channel. Follow us on Spotify, Apple Podcasts, and/or Stitcher. Feel free to share an audio or video clip around our show. We may include it into one of our future podcasts. You can find us at marketing@openpeoplenetwork.com. Your support and comments are truly appreciated. You can also check us out at supportersfund.com, or for startup events, visit openpeoplenetwork.com. Thank you and have a fantastic day.